Welcome to ShortView Trading. This is your morning market hit for Tuesday, 9th of March. What matters today for traders? Well, the rotation theme in markets out of growth and into cyclicals continued yesterday, and it was especially marked, more so than it has been in recent trading days. Driven, of course, by further strength in bond yields, with the 10-year closing at a new local high. And with that, cyclically sensitive areas of the market, the Nasdaq banks, for example, closed up sharply. The energy sector added somewhat to its recent gains. The Dow Jones Transports Index made a new intraday high, and over in Europe, the DAX broke out of its recent trading range and above its key resistance levels. While cyclicals perform well, growth and tech parts of the market remain disrupted by this move higher in yields. The Philly Sox, for example, was down 5.4% yesterday, testing its intraday lows from certain leadership names like Tesla, which were the darling stocks of 2020, have remained under pressure. And so if we stand back and look at the three key areas of the market, cyclicals, growth and defensives, you can see that the recent weakness is centered on tech, while cyclicals and defensives have held up reasonably well. So where does that leave us? Should we be looking to buy this dip in tech, or is the rotation theme only just getting going, with potentially more downside to come in indices like the Nasdaq 100? The 200-day moving average is pretty key in that respect. It's considerably below current levels, as you can see on this chart. For answers on all of that, have a look at our daily trading publication. It's available on our website to subscribers. We also offer a 7-day free trial, and in that publication we make a 1 to 2 week trading recommendation on US equity futures, long or short, and really that recommendation is driven by the positioning, the messaging that we're getting from our short-term models, some of which are starting to generate buy signals for the Nasdaq 100. Others, like this one, are approaching their buy thresholds, but they're not there yet. This is a breadth model for the Nasdaq 100 index. On top of that emerging buy message from our short-term models, it's worth noting that the US dollar, having rallied quite sharply, is now technically overbought. This is our technical scoring system for the dollar index. It's generating a strong sell message, and it's been timely in recent months. Usually a weaker dollar is a key tailwind for equity markets, so that adds to the case for thinking about starting to move long this equity market. What are we watching today? Well, in terms of data and events, we're reasonably light, but out of the US we're getting the NFIB small business optimism reading, we get a final estimate for Q4 GDP from Europe, and we get total social financing out of China. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading, join us on Twitter, LinkedIn and Facebook. Thanks for listening.